Now let's take a look at what happened in the property markets over the weekend. And starting across Australia, nationally, the auction clearance rate was 61% from 1,245 auctions, and noticeably it was stronger. In Sydney, there were 398 auctions. The clearance rate there above 64%. You can see there were also 1,284 private sales in Melbourne, 457 auctions, a clearance rate 67.8%, plus 997 properties sold privately. In Brisbane, 70 auctions, a clearance rate just 40%, but another 1,069 private sales. In Adelaide, 46 auctions, a clearance rate of 63% and 252 private sales. And lastly, Canberra, 61 auctions, a clearance rate above 65% and 72 homes sold privately. So joining me now, Eleanor Creagh, who is Senior Economist with REA Group. Eleanor, the vibes changed, the mood's changed, hasn't it? You could just feel it out there with those auction clearance rates.
Yeah, certainly a little bit. I mean, in Sydney in particular, that auction clearance rate is actually the strongest clearance rate we've seen since April. So definitely we have seen over the past few weeks a little bit stronger rate of clearance, more properties clearing, and potentially we're reaching that point where vendors have reset their price expectations. Home prices in Sydney have been falling for the past few months. They're down now more than 3% from their peak. And I think also buyers as well know that interest rates are going to continue to rise. Borrowing capacities are going to continue to be constrained. And there's a lot of choice out there at the moment, and potentially people are starting to kind of take advantage of that.
But that raises a question about the Reserve Bank and its strategy. If all of a sudden people are going, well, you know, we can cope with these interest rate rises, it's not going to be a big drama, we think we can manage, and the property markets start to pick up, that's inflationary in its own right. You know, this is running almost counterintuitive to what the Reserve Bank might want to actually achieve in the housing markets and the overall economy.
Yeah, I mean, certainly if that did start to unfold that way, but we have seen that sales volumes have significantly slowed. So certainly the fast pace of rate rises that we've seen are having an impact. And I think at the moment it's a little bit of a question of how long it takes for those rate rises that we've seen to date to kind of really trickle through. Because for a lot of people who say we're on fixed rate mortgages, their terms haven't actually rolled yet, so they haven't seen that increase in repayments. For a lot of people on variable rates, they didn't lower their minimum repayments throughout the pandemic as interest rates fell to record lows. So they're also kind of ahead on their mortgage. So there are people out there who haven't necessarily felt the pinch of rate rises yet.
And so the second part about this is then the demand for property. And what you're seeing now is more international arrivals to Australia, including students. And that means, particularly for the rental markets and underpinning apartment prices, is a number of new immigrants coming into Australia. And that is also stimulatory to the Australian economy.
Exactly right there. I mean, in June, we saw the number of student visa applications hitting a record high. In July, that strong pace has continued and actually up 40% on pre-pandemic levels on a weekly basis in July. And at the same time, at realestate.com, we've seen that overseas searches to rent have surged. So up 59% in the last 6 months compared to the 6 month prior. And that's against a backdrop of a rental market that's already incredibly tight. So on a national basis, rental days on site hit a record low 19 days in July. That's even faster in places like Brisbane, 15 days. Just 15 days for a property to be rented. So the rental market is incredibly tough for would-be tenants at the moment.
And I want to raise one more piece of evidence, and that is the number of properties that are hitting the market that are in that luxury sort of sales grouping, the higher price group. That's also key.
Yeah, exactly right. So we've seen that new listings for luxury properties in the capital cities, so that's properties priced at or above $3 million, have surged 49% year on year. At the same time, actually, sales volumes for luxury properties have declined as interest rates have risen, slipping 30% in the last 3 months as rates have risen. Now, you know, the pool of buyers qualified to purchase a premium property is shrinking as borrowing capacities are being constrained and the cost of servicing a mortgage is rising. So certainly at the moment, there's a lot of choice out there when it comes to luxury listings.
I'll tell you what, Eleanor Creagh, always good to have in the program. Good to have in the studio as well. Many thanks for your time today.